Hi, Namaste everyone. Are you doing or filing GSTR-9 same as the last year? If yes, then immediately stop it. You might be missing the bigger picture. Welcome to GSTR-9 and 9C Masterclass. See, why is GSTR-9 and 9C so important? You might guess right. See, my belief is GSTR-9 and 9C is our or yours client story in front of the department. The question is whether that story reduces risk or create it. Based on an unofficial study, approximately 40 to 50% cases which are based on 1 3B, 2B, 3B, etc., are dropped merely considering 9 and 9C as sufficient and appropriate evidence. If we have filed GSTR 9 and 9C correctly, and reported disclosed correctly, there are high chances that litigations which will come in future will be dropped based on our rectifications, disclosures made in GSTR 9 and 9C. Similarly, if we have made mistakes in 9 and 9C or done some wrongs in 9 and 9C, the chances of getting notices are very high and the defendability will be lower on our side because 9 and 9C being a self-declaratory statement, if we have made the declarations correctly, it would be a great evidence at any stage of the litigation in future to get it dropped. In the same way applies if we have not done it correctly. And also, some statistics say that 30% of notices are still at appeal stage or tribunal stages because of improper reporting in 9 and 9C and lack of sufficient and appropriate evidences, which we would have been having if there was a sufficient appropriate evidence. Okay, and in the similar way, 9 and 9C may also give rise to new litigations. Okay, so with this brief, let's jump into our GSTR 9 and 9C detailed session for next 1 hour or so. So we will discuss. Our agenda is mainly to focus on the key amendments which have happened in the current year, but to understand the amendments properly, we'll briefly go into key provisions, then come to technical bottlenecks which were available at the end of previous year, then overall structure of GSTR-9 amendments, then the challenges which we are still continuing, means the government has not taken any action on, and a quick recap of everything we have discussed till now. See the key coming to key provisions. We all know Section 44 is the origin or base section due to which there is a requirement to file an annual return. This section basically excludes certain kind of people from filing GSTR 9 and adds a limit or continuation to Rule 80 to determination of the turnover. Rule 80 says these persons are not liable to file GSTR 9 as may be prescribed, and that as may be prescribed is given in notification 15. Basically, notification 15 by 25 is a notification which has exempted filing of GSTR 9 for people having turnover less than 2 crores. Earlier, it is like every year we get a new notification stating the turnover, but this notification they have mentioned that FY 24-25 and onwards. So 2 crores is the agreed predetermined limit for 9 and 9 list 9C unless until we get a new notification. Okay. Next, the most important notification which we discuss in the entire section or on what our focus is notification 13 by 2025 through which modifications have been done in forms GSTR 9 and 9C. Right? Then we have also based or touch upon the instructions which are given at the end in GSTR 9 and 9C, which helps us to understand what is the amount we need to report in each tabs. Next is FAQs issued by the government, including the latest one which has been issued on 4th December we have included the FAQs in the case scenarios which come along. Now, these are all provisions related to filing GSTR 9 and 9C. And our most favorite section, which is late fees, section 47 specifies the late fees. We will also discuss about those. In recent cases, we have seen so many notices saying on late fees paid on 9, not paid on 9C, etc. etc. Okay, so section 47 is a governing section for late fees. These are the overall provisions which we are going to cover today. Is it clear till now? Hope it's clear. Okay. So let's understand the technical bottlenecks in the GST annual return as on previous year. Because amendments, every time we observe amendments, amendment is done to correct something which was wrong earlier. So to better understand what are the amendments, if we understand what are the lacking in the previous year's annual return, we would be in a better position to analyze why an amendment was needed and what is the amendment to. So overall, the technical bottlenecks we can see are the loopholes or lack of congruence. These that can be grouped into these five topics. First one is there were some reporting gaps. We were facing this issue for 4 5 years till now. We never had an option to enter the prior year ITC claimed in current year. Agree? Agree? Correct. So that was one gap which was long standing. People generally say that 1718 was designed keeping 1718 as a base year. So GSTR 9 has been designed keeping 1718 as a base year. However, 18, 19, 19, 20 they have continued the same. So this problem is there. Whatever may be the reason, we are facing that problem. Generally, till now, we would have been done an adjustment in table 6M or 8C. Many people had many opinions, mostly falling into these two tabs to nullify the effect of previous year ITC. Let's see if government has made anything regarding this. Then there was interpretation risks. It's like the statements in GSTR-9 says something. However, we would need to refer to instructions that would be saying something else. Classic example is credit notes. It says credit notes pertaining to about transactions. Whether we were confused to see whether it is credit note pertaining to 20, say 23, 24, even though issued in 24, 25, should we report it, not report it? We have clarifications on that, but GSTR 9 wordings were not so clear in so many places. The next major, or what do you say, question was, or impossible thing was, how do we match 8A with 2B or 2A? That was a rocket science for us. They have introduced some Excel. 8A was not matching with Excel, Excel was not matching with ITC comparison amount which is appearing in the portal. So nothing was matching with nothing. Even though the difference may be minor amount, there was no exact matching to many of us. So that is also a problem. Then there were disclosure gaps, same as previous year ITC reported. For in case of imports and etc., only table 13 was providing and nothing was there in table 8 to show what is the amount we have claimed in subsequent years. And along with this, there was operational hurdles like HSN, they made it mandatory from 21-22 in case of outward supplies. But we had never had an option to see what is the summary of HSN details which we have reported in GSTR1 till now. We would have been using some third party software and seeing, but this is also an operational hurdle considering that we need not, or there are some people who cannot afford to pay for summarizations, etc. So majorly these were bottlenecks. There are some other as well to say there is no place to mention non-GST purchases, etc. Whereas in GSTR 3B we were mentioning them. Okay, so these were the overall bottlenecks in the previous year, right? Before we jump into understanding the amendments, let's understand the overall structure. If you want to explain to any newbie or anyone, the simple structure of GSTR-9 can be divided into four parts: outward supplies, inward supplies, tax summary, and others. And in 9, there are various tabs to see, or we can also call it them as tables. There are approximately 14 tables. Those are divided into each of these buckets. Like table number 4, 5, 10, 11 are pertaining to only outward supplies. Table 6, 7, 8, 12, 13 are pertaining to inward supplies. Table 9 and 14 pertaining to tax summary. Table 15, 16, 17, 18 are others like HSN, etc. Okay, now we will also understand the amendments according to these tables so that we have a clear picture there. So, first we'll understand amendments in outward supplies. As we discussed, many of us will be very familiar with this table 4.5, table 10.11. Table 4.5 logic is very simple. Current year transactions reported in the current year. Say 24-25 transactions reported in 24-25 itself. Then if 23-24 transactions are reported in 24-25, we should not consider that. Hope this is clear to everyone till now. Now, what is table 4 and what is table 5? See, table 4 is for transactions where taxes are payable and paid. Table 5 is for transactions where taxes are not payable itself. Simply, table 4 is taxable transactions or transactions where tax is paid. Table 5 is where tax is not itself not payable, like exempt, export without payment, etc. So to briefly tell, table 4 contains B2B, B2C, exports with payment, SEZ with payment, inward supplies liable to RC. Okay. Table 5 contains exports without payment, SEZ without payment, then nil rated non-GST exempted supplies. Pretty simple. Okay. I'll also show you the structure of how these appear in our GSTR-9. So these are the tabs we get or rows we get in table 4. So first is of B2C, then B2B, etc. Okay. But only condition is current year transactions reported in current year. We can put them here. If current year transactions are reported in the subsequent financial year, then we'll put them in table 10, table 11. Okay. If current year transactions are missed to be reported, then you either have a choice to put in table 4 or 5, or you can put it in table 10 and 11 based on how do you do. If you want to report those transactions in the subsequent year GSTR 1 or 3B, you can put in table 10, 11. If you want to just pay through DSC 03 and not report them subsequently, you can go with table 4 or 5. Okay, so this is table 4 and this is table 5. Table 5 is also very simple: zero rated, without payment of tax, exempted, nil rated, non GST, etc. etc. Okay, and table 1011, as I said, current year transactions reported in next year. There are no amendments in outward supplies which are affecting the intent or way how we were reporting previously. Everything remains same. Only there is some more rewording has been done, but the overall intent or reporting structure is same for outward supplies. Example of rewording is in table 10 we used to put additions made in the next year like amendment, debit notes, etc. They also added a word invoice there. Table 11 we use it for reductions. So they have made some more minor rewordings. Okay. And apart from this, last year only they have added this tab to see supplies on which e-commerce operator is required to pay tax under 9 subsection 5. This needs to be reported by e-commerce operator and not a person who is supplying through e-commerce operator. In the similar way, table 5, there is one column addition to say this needs to be reported by person supplying through e-commerce operator. See, the logic is simple. In case of 9-5, e-commerce operator pays the taxes on behalf of us. So, table 4 is only for where tax is payable. If we are not an e-commerce operator, we are not required to pay tax and it will come to table 5. Or else, if we are e-commerce operator itself, since I am liable to pay tax, I would be putting my details in table 4. Okay, hope till here it is clear. We'll just do a quick recap through a simple illustration so that we can get quickly revised. Okay, we'll just do a quick in GSTR-3B. Let's say we have disclosed 25,000 in 3.1.8, which is our taxable value and on which we have paid taxes. Now, in this 25,000, 3,500 is pertaining to B2C supplies of 23-24, means previous year, reported in current year. Okay. Next is B2C supplies of 24-25, reported in 24-25, 4,500. Next is B2B of 23-24, reported in 24-25, amounting to 5,000. B2B supplies of 24-25, reported in 24, 12,000. Simply this and this pertain to previous year. We have reported in current year and paid in current year. This is pertaining to current year, reported in current year. Next one is one invoice reported in GSTR-1 of March 25 and GSTR-3B of April 25. See, one for 24-25 GSTR-1 we have reported in March 25 and GSTR-3B we have reported in April 25, amounting to 9,500. So now let me know what are the values which come in 4A, 4B, if whether something comes in 4C, and table 10. See, should 4A be 8,000 or 4,500? Should 4B be 17,000 or 12,000? And where should this 9,500 go? Should I add this 9,500? Sorry, should I add this 9,500 to B2B? Like whether 4B should be 12 plus 5 plus 9, 9 and a half? What should be the values? See, the correct way of reporting is we should only report 4,500 in 4A, 12,000 in 4B. Even though 9,500 we have reported in GSTR-1 of March, since we have paid taxes in the next year, we should report 9,500 in table 10. Okay, cool, understood. But system will automatically give this value as 8,000 and this as 17,000. We should edit them and make it as 4,500, 12,500, and okay. Let us now understand about the inward supplies. See, the major changes in inward supplies is about introduction of a row called 6A1. Apart from that, the another major change is they have updated the reconciliation logic. How the figures flow into table 8 has been modified. Apart from that, they have also added or made it clear that what is the intention of keeping the row 6M, which we were earlier using for various other purposes like balancing figure, etc. Now we'll go one after another understanding what it is, and we'll also see how table 6, how table 7 and table 8 appears in the GSTR-9. Okay. Before we jump into or see how tables 6, 7, 8 and 8 are in the GSTR 990, let us understand from where the values flow from GSTR 3B to GSTR 9. This page we would be very familiar with. Every month we file the same 3B. So this is 4E, where we claim the total credit by dividing it into import of services, all other ITC, etc. Second is ITC's reversal tab, which is called 4B, where we do permanent reversal and temporary reversals as well. The next tab is 4D. See, this is only a disclosure tab. Whenever we are reclaiming the credit which we have already temporarily reversed, we will disclose it here. This tab will not affect our electronic credit ledger or 3B. It's just a disclosure. Okay. Being clear with how 3B looks and from where to where the data flows, it will be very helpful in our quick understanding. So this table 6. In table 6, these are the two things which got added in the current year. One is A1, other is A2. The logic of table 6 is simple. It will pick the total credit claimed in GSTR 3B, and that total credit claim we were supposed to divide among whether it is FCM supplies, RCM supplies, or are there any import, SEZ supplies, etc. etc. The logic remains same, but only thing is they have removed the previous year credit from this so that you need to explain only credit pertaining to the current year. Table 6A, this comes from 4A of GSTR 3B. If you see this total, if we see this total, 4A total comes to table 6A. Okay. From that, we need to remove the previous year credit. See, the wordings of 6A1 says ITC of preceding financial year claimed in current financial year, excluding Rule 37, Rule 37A. Rule 37 is A is the reversal because of 180 days payment thing. Rule 37A is the case where supplier has reported our invoice in GSTR1 but failed to report, failed to file 3B or failed to make payments and subsequently made the payment. So Rule 37A is in those cases we need to reverse the credit and reclaim it whenever supplier pays through GSTR 3B. Okay, except these two, whatever preceding financial year credit we have claimed in current year, we should report in 6A1. The moment we report in 6A1, it will reduce it from 6A. So 6A2 is 6A minus 6A1. And we need to provide the explanation only for 6A2. Okay, and this logic remains same. In B, we will put all FCM supplies, C, D, RCM supplies, reporting or this dividing among capital goods and inputs or input services is mandatory. Inputs and input services we can club and put in inputs as well. Okay. Other addition in table 6 is 6M. Earlier, which we used for disclosing previous credit. Some accepted it, some differed with the view. Whatever the reason may be, previously also it was for the same purpose. Now they have clearly mentioned on the face of form that it is ITC pertaining to only ITC claimed in 01, 02, 02A, and it should not include any credit which has been claimed through GSTR 3B or transition forms. Only these three rows are addition in table 6. We'll dwell upon 6A1 and 6M in detail. This is a brief. Okay, now table 6A1. See, heading is very clear. Preceding year, credit claimed in current year, apart from Rule 37, 37A. What it is, 23, 24 credit claimed in 24, 25. But in the reclaimed part or claimed part, if we have reclaimed anything because of Rule 37, 37A, we should not include that. Basically, 6A1 should not include it. So 6A2 will include it. And then in bifurcating, we will put that in 6H. What to include? Say there are other reversal. For example, we have received invoice, we have made the payment, and GSTR to be also it is coming, but we have not received the goods yet. So in those cases and various other instances which Circular 170 tells, if we are temporarily reversed and reclaimed, that credit should be included in 6A1. Only if it is because of Rule 37 and 37A, we should not include that in 6A1. Logic being, government believes that reclaim of Rule 37 or 37A credit pertains to the year in which it is claimed. Okay. In the same way, Table 6M is only for ITC availed through 010202A, not to 3B, not to transitional credits, and this is not a balancing row. Okay, now coming to Table 7. Table 7, more or less everything remains same, except that they added a new row to write the values pertaining to Rule 37A. And they have also made it mandatory to disclose the reversals according to section. Till now, it was not mandatory. We were putting everything under other reversals. Now, it is mandatory for us to divide and put the amount in respect of each section. As we see, this may bring us new difficulties to say Rule 37. Department people may ask us, you are not reversed under Rule 37E, so reverse it or directly mapping. You know how many difficulties or issues comes from the department. So this is one of the key area in reporting for this year as well. Next is table 8. See, table 8, the only new column is table 8H1. This is for import credit paid in current year but claimed in subsequent year, maybe because of late bill of entry or things like that. If you have paid IGST now and claiming in subsequent financial year, we'll report it in 8H1, same as 8A, 8B, 8C, 8D, 8H, 8H1, and 8G is used for calculating difference and whether it is reconciling or not. Okay. Now, the key change in this reconciliation, 80 to 80, as we discussed in our initial technical bottlenecks as well, 80 was very confusing and we were most of the times we were not able to match it with any of the figures that portal gives. So now one thing they have done is they have changed the logic of 80. Basically, 80 is now all credits pertaining to FY 24-25 appearing in GSTR to be of April 24 to October 25. First thing, they are not considering 2A, they are considering 2B. Second thing, they are considering only the invoices of 24-25 and not 23-24, even though they are appearing in 2B of April to March 25. Third thing, they will also consider 24-25 invoices appearing in April 25 to October 25. Simple. They made it simple that 24-25 invoices, whenever whichever period it is appearing, if it is within the timelines, that is going to show in our ET. Same way, they will also give an Excel tool or Excel figures for the ATA. Now, in FAQs, they have also said what is the difference between the Excel ATA and ATA figures appearing online. So they claim that differences will be only because of RCM and amendments. There is a list of differences. So if our Excel is not matching with the ATA figures here, we can go through that, remove those from the Excel, then it will match. Next is 8B. 8B also we faced a lot of difficulties in the previous year because it was automatically taking values from 6B and 6H. So now it is will take only 6B because the reclaimed credit will not appear again in 2B. This also we made a lot of exercise to reduce, add, etc. Now it is clear. Next part is 8C. 8C is current year claimed in next year. Correct. Only the problem is if we have claimed in the current year, reversed it, and then reclaimed in the next year, then if I add that into 8C, it is basically counting twice because 6B has once and 8C will 6B has once, which means 8B also has it, 8C also have it. So to avoid the duplicacy, 8C is FY 24-25 credit claimed in 25-26 excluding the reclaims irrespective of the section under which we are reclaiming 37, 37A or circular 170. Clear? We'll understand these better once we do the case studies. Now, the next is new one. Import IGST claimed in next year. Simple, same as 8C. A new row has been added to put these values. Okay. As we discussed in outward supplies, table 4, 5 are for current year, table 10, 11 are for the subsequent years. In the same way, for inward supplies as well, table 6, 7, 8 are for current year, table 12 and 13 are for the subsequent years. And 12 is for reversal of ITC, 13 is for claim of ITC. Okay, simple ITC pertaining to FY 24-25 reversed in 25-26 should come in table 12. ITC pertaining to 24-25 claimed in April to October 25 should come in table 13. Here the only thing is rule 37 and 37E claims should not come here. If reclaims because of other than rule 37 37A, that should be part of here. See 8C, any reclaim we are excluding. Table 13, we are excluding reclaims only because of rule 37 37A. If we are reclaiming because of circular 170, goods, raws, received, etc., that should still form part of table 30. And one more important thing is they might link table 13 to 6A1 of the next year. Okay, clear? Let's go into scenarios. We will understand better in scenarios. Scenarios, I have made 6 scenarios. First one was very basic and adding one complexity after other till we reach the sixth, so that all different types of cases which we might face in practical, like practical GSTR 9 and 9C would have been covered here. Let's start with the scenario. First is very simple. 23-24 credit claimed in 24-25 amounting to 150, 24-25 amounting to 800. That's all. No temporary reversal, no reclaim of credit, etc. Same way in 25-26 GSTR 3B, 200 of 24-25 claimed in 25-26, 700 of 25-26 credit. No reversal, no reclaim. Very simple, and this is how we file the GSTR 2B. Correct? Now the question is what are the values and how much should we put in each of the table in GSTR 9 in this given scenario? Simple. See first table 6A as per 3B. As per 3B, we have claimed 950. So 6A, here we will type 950. Next, 6A1 ITC of previous year 150. Here we have not mentioned about any reclaim in this 150. So 6A1 is 150 and 6A2 is 950 minus 150, 800, and there is no reclaim as such. So 0. There are no reversals. So 0. And table 8A, as we understood the new logic, it includes all invoices appearing from April 24 to October 25. So it should be 800 plus 200,000. Next, 8B we will get it from 6B, assuming there are no RCM etc. We will 800 will be our 6B, and claimed in subsequent year. Here also there are no reclaims, so our 8C is 200 and difference will be 0. And coming to table 12, 13, no reversal and availed in next year is 200. Hope it is clear. It's very basic one, assuming no reversals and transactions. If there are no reversal and no reclaims, there is no much change. Only thing is in 682, we should ensure we enter it properly. Okay. Now, so let's just go into 9C and see how this transaction affects. Simple, my 24-25 credit is 1000 rupees. I have claimed credit of 23-24 as 150. Now, the amount which goes to table or GSTR-9C is from 7J, which is ITC claimed minus reversals. So here my net ITC claimed is 800 minus 0. So I will get 800 at GSTR-9C. So let's see how this affects. In GSTR-9C, table 12 is the in GSTR 9C, table 12 is the reconciliation table. One is 24-25 credit full 800 plus 200, because 1000 I would have recorded in books immediately. If it is not there, it is okay. It is also fine. Assume we have recorded 1000 in the same year. Next, ITC booked in earlier financial year, claimed in current financial year. It is 150. Then ITC booked in current financial year, claimed in subsequent financial year, 200. So net ITC availed as per audited financial statements is 950. Whereas ITC claimed in annual return is only 800. We will get an unreconciled difference of 150 rupees. Okay. This government has also been recognized and it has also acknowledged this in its FAQs issue. So we can mention the reason for unreconciled difference as previous year credit. The other issue is we may think that if we put this as 0, there will not be any difference. That option is also encouraged, but only thing is, as per the GSTR-9 instructions, it is mandatory for us to fill all these details. So it is our audit judgment or professional judgment to see whether you want to write this and make it as an unreconciled difference, or you want to just put this as 0 and keep the difference as 0. So it's our professional judgment and professional call we take. And this issue is going to come whenever there is a previous year credit which we have claimed in the current financial year. We are not bringing this table in all cases. It will be a repetition, but this issue is there. Shall we go to the next case? Okay. See, in the next case, only addition is the temporary reversal of 30 rupees pertaining to previous year 23-24, and we can take it as either because of 3737A or anything else. So we have just reversed it, we have not reclaimed it. Okay, in this scenario other things are same 951 because we see the logic in the previous solution. But the surprising fact is this 30 does not form part of any table. Okay, this 30 does not form part of any table. Reason being, see, total credit availed 150. We have already removed from the credit availed in GSTR-9. So 30, which is reversed out of 150, need not be shown separately because table 7 does not have a column to show ITC reversed pertaining to previous year. Okay, this is also been acknowledged in FAQs issued by the government. Okay, clear? Let's go to the next scenario. Okay, now same thing, we have temporarily reversed 30 and we have reclaimed 5 pertaining to previous year because of rule 3737A, 10 because of other than rule 3737A. Now where does it affect? First is 6A1, we should not consider this reclaim of 5 because we should consider as it as this year's reversal or this year claim under 6H. So first is we should reduce this 5 from 150. So if you see 6A1 will only be 145. Then 6A2 will be 805, and while dividing 800 goes to 6B, 5 goes to 6H. 6H why? Because it is a reclaim. And since 6B is only 800, 8B will also be 800. The remaining is same. Okay. There are no reversals of the current year, so table 7 is empty, and no reversal of current year made in next year, so table 12 is also empty. Okay, next. See, the next addition in this problem is we have temporary reversals for the current year and also reclaim for the current year, and next year nothing is changed. The only thing is we have temporarily reversed 290 under different sections or rules, and the same way we have reclaimed the 290 in the same year. Say we have purchased in April, reversed in October, and reclaimed in February or January. Then how the situation comes. Simple 96A should be 950 coming from GSTR 3B. Next, ITC of previous year 150, and this 150 should not include rule 37. So 3737A, so for minus 5 145, and net ITC is 805. But here total ITC reclaimed is 200 plus 90 plus 5, 295. Clear? And this directly goes to table 7, 290 because these are of current year reversals. Now what is 2B? 2B is 800 plus 200 minus 290 because 290 we have reclaimed. 710, 6B, which is 805 minus 295, 510. ITC claimed in next financial year remains same. Hope you understood. See, temporary reversal first is we should show it in table 7. Next, this 2 will come under 6H, not under 6P. Clear? See, in the next sum, continuation to previous sum, keeping all the conditions which previous sum had, we have modified that reclaim is not complete. Say we have temporarily reversed 290, but we have reclaimed only 180 plus 75. Yeah, like remaining 20 and 15 are reclaimed in the subsequent financial year. Okay, see, we have reversed to 219 October. We have claimed 180.75 in February, and 20 comma 50 we have claimed in the May or June. Then how does it come? 6A simple, direct 950. 6A1 is also very clear. 6A1 is also very clear. 150 minus 5, 145. And net ATC is 805. Here, reclaimed amount is 180 plus 75 plus 5. Because we have only reclaimed to this extent. 260. Table 7 reversal 290. Clear. Next, as per 2B is same, as per 6B is also same. ITC claimed in next financial year. See here, 8C does not include any reclaims. Out of two, out of 200, 20 plus 15, 35 is a reclaim. So 8C is 200 minus 35, which is 165. And table 13, if you see, table 13 excludes only reclaim because of rule 37 and 37E. So table 13 is 200 minus 20, which is 180. Clear? Now pause the video and try to solve this. If you are able to put the correct values in all the tables, it means you have correctly understood the amendments part in GSTR-9C, and in any given situation you can easily solve and disclose appropriately. Pause for 2 to 3 minutes and try to put the figures here. And only additions in this is we also have reversals of current year in the subsequent financial year. Okay. See, 950 is same. 6A1 is also same. 150 minus 5, 145. Net ITC same. 950 minus 145. ITC reclaimed 180 plus 75 plus 5, 260. Clear? Table 7. This will only have current year reversals made in current year. Next, if we have made reversals in the next year, that will go to table 12, not table 7. 290. 6B is same. 8C also, you have understood the logic previously. Correct? Reclaim is how much? Reclaim is 20 and 15. We should exclude both the reclaims. 20 plus 15. 200 minus 20 plus 15 is 160. Okay. See, this is 165. Next, reversal in the next financial year is 35 plus 45, which is 80. And then availed in next financial year is 200 minus 20, because it is due to rule 37 and 37A, which we need to exclude. See, if you can do this problem correctly, or if you understood this well, this has covered all possible practical scenarios, and you will be able to do GSTR 9 and 9 with cakewalk. Okay, you can revisit this one more time and see the values. Okay, so completing the inward supplies, we'll move to tax summaries. Since we have completed both outward and inward, tax summary is outward minus inward. Simple as that. See, tax summary table is 9 and we also have table 14. This is a new column which is difference column added in the current year. The values for in these tables will get auto-populated from GSTR 3B. However, tax payable is an editable number. Okay. Ideally, tax payable, we should match it with table 4N values, right? And paid through cash, paid through ITC will come from GSTR 3B. Tax payable minus tax paid will be appearing in your difference column. Clear? Let's take, there is one small hidden nuance in it. Let's take some example. You will be able to understand it in a better manner. Okay. Let's consider this scenario. Simple. Assume this is IGST or any tax paid. So the scenario is we have paid 4,500 as taxes in 3B in the current period 3B, like April to March. In this 4,500, we have supplies pertaining to 23-24, B2C as 630, B2B as 900. B2C current year 810, B2B current year 2160. Okay, and there is one transaction which has been missed in both GSTR 1 and 3B, which is in the nature of B2C. Since it is B2C, we thought we will put that in GSTR 9, table 4, and pay through DRC-03. This is a simple situation. Now, in tax payable, see, as I said, it should come from table 4N. So I will take 630, 21, sorry, I'll take 810, 2160, which are pertaining to current year, plus 1710, which I am adding, which totals to 4680. Now, my ITC paid, which is as per 3B, will be of 4500 because I have paid 4500 in 3B. If you see, the positive difference is 180. But if we pay DRC 03 to only 180 rupees, it would be our mistake. The reason is tax payable does not have any previous year payments, whereas paid with ITC, this utilization has also does include ITC utilized for previous year payments. So generally at the last moments we tend to pay the difference amount in DRC 03 directly. If we do that, it will be a mistake. So consider if there are any previous year supplies on which taxes are paid in the current year, then ensure your difference between tax payable DRC is greater than difference between tax payable and paid. As simple. And if, for example, in this situation, if we don't have this transaction, then our difference will be negative. Even though the difference is negative, nothing to worry. Okay. Hope this part is clear. So next, in the similar way, there is also a table 14, which is only based on table 10 and table 11. Basically, current year transactions reported in subsequent financial year. Payable will come from there. Paid, we should manually enter. This can be minus plus, or paid can be also a negative sign or a positive sign. But ensure that difference is zero. Ideally, difference should be zero because for the transactions what we report in table 10 and 11, we should have ideally paid the taxes in subsequent financial year. Okay, clear? So this is a brief about tax summaries. Okay, next we move to others tab, which is basically table 15, 16, 17, 18. These are mainly related to HSN, demands and refunds, and composition and deemed supplies. Okay, in these four tabs, only table 17 is mandatory, and remaining are optional. And table 17 is all about HSN. Okay, this also a couple of years back became mandatory, and the condition is HSN summary is mandatory for people who are having turnover more than 5 crore in 6 digit level, whereas who are having turnover less than 5 crore, it is only mandatory for all B2B supplies and at 4 digit level. This is simple, but one of the difficulty was we never had a summary of what we have reported in the GSTR-1 directly. That has been facilitated by the government, and if you see this download table 12 of GSTR-1 or 1A HSN details, we will be able to download this Excel directly from GSTR-9 portal, and this is how it appears in the portal. Oh, so this is briefly about others. So we have covered outward, inward, tax summary, and others. The remaining thing is late fees. What if we have paid delayedly? As a recent circular was there, now GSTR 9 and 9C are considered as a single return. Okay, but the thing is, let's say I have filed GSTR 9 on one date and GSTR 9C on same date, then there is no issue. If I file GSTR 9 on say today and I am filing GSTR 9C on after 5 days or after 10 days, the question was till when the late fee should be calculated. So for this, government has come up with a alternative or suggestion to say late fees will be calculated till the date of filing of GST or 9C. But they have inserted they have inserted it in such a manner that till the date of filing G of GST or 9, if any late fees is applicable, you are liable to pay on GST or 9 file. After that, say from GST or 9 to GST or 9C, if there is any period between both, then only for that period you will pay late fees GST or 9C. Simple. Government also considers it as a single return, but whatever has been filed lately till the date it wants to collect the late fees. So there is some very beautiful example for it. Since the due date is 31st December 2025, let's assume GSTR 9 is filed on 15th February and GSTR 9 is filed on 10th March. Then late fee will be calculated as below. For GSTR 9, late fees will be calculated for 46 days and your system will automatically pop up the late fees for 46 days. For GSTR 9C, if you file it on 15th Feb itself, then no late fees will be calculated. If you file it further delay, then from after the day of filing GSTR 9 to date of filing of GSTR 9C, it will calculate the late fees. Clear? And for this, 9C is also amended. Now 9C will also have a table for late fees. Hope it is clear. In simple, as read with notification 7 bar 2023, we all know the late fees. So this is a brief table up to 5 crore 25 per day, 5 to 20 crore 50 per day, and about to 20 crore 100 per day. This is per act. So ideally our late fees will be into two: 25 CGST, 25 GST, and similar for all other things. Okay, clear? Key reporting challenges which we are also having currently are we don't have a place to mention prior year ITC reversals in at all places like Table 7, GSTR 9C, etc. Then still ambiguity continues in certain sections, and all others like purchases, etc., remain to be there. We are not able to enter non GST purchases, etc. Okay. Then, since we have understood or gone through the entire concept, these are few misconceptions which are not matching or clear in the current year. Say table 8C, we would be thinking table 8C will be equal to table 13, but need not be. 8C may not match table 13. You know the differences? One is reversals other than 3737A and imports are same. Imports basically imports. Okay. Next, table 4B in 3B will not match with table 7. Reason, previous year reversals. Same way, table 4C will not match with table 7J. This has also been written in the FAQs issued by the government. The table 4C need not match with 7J. Next, table 4D1, which is relating to reclaim, need not match with table 6H because previous year reversals will be excluding them from 6A itself. Next, positive difference in table 9 need not or may not be matching with DRC-03 to be paid. DRC-03 to be paid should be higher. As we discussed, it is positive difference plus previous year tax payable paid in current year. Okay. Till here, any questions or queries? Okay. So the next is to say few thumb rules. Table 4, 5, 6, 7, 8 or relating to current year. Unless until specific row is available for entering previous year data, we need not or we should not enter previous year data there. Table 10, 11, 12, 13 is current year data reported in subsequent financial year. Okay, and the new things which we are seeing is table 6A1, which is ITC of previous year claimed in current year other than reclaim of rule 37 and 37A. 8C, current year ITC claimed in subsequent financial year other than reclaims. Table 13, current year ITC claimed in subsequent financial year other than reclaim due to Rule 3737A. Clear? Okay, so these are few new things. 9C, we might have unreconciled difference in ITC because of previous year credit claimed in current financial year. And yes, so this is a overall view and the flow of GSTR-9 and 9C current year. And mainly the table 8 logic has been changed. So keep in mind of this. As I said in the beginning, it is a story that you tell to the department about your client. It can increase your risk or reduce your risk. Ensure that you disclose and file in such manner that it will act as